1.5 thousand pips on US30 in under 45 minutes. This is how we done it. Alright, what is good my people? Welcome back to the channel. It's your boy Daniel Fix. Now today I'm going to be going through a trade that we took live on session on the Learn and Earn Discord the other day. It's a very nice US30 short movement. Price came into a key area and had a big sell-off, and I'm going to explain to you exactly how I was able to find this setup, what enabled me to take it, and why I was confident that price was going to go to the downside. Now if you've been on the Learn and Earn or any of the live sessions we've had in the past month, you would know that it's been pretty slow. I haven't really been trading too much, and I've been saying that price has been choppy. Now what I mean by choppy price action is if you actually zoom out to the daily time frame, you can see like throughout a lot of the February month and a bit of January, and even coming into like the start of March, we were pretty choppy in terms of price action. We were consolidating, price wasn't really trending, there was no clear directional bias. But eventually we managed to break out of that, had a clear directional bias. We did have a little pause right here as we came to break structure, but we broke out to the downside. And to me, it was a clear indication that we were going to continue to short and eventually target some of this low sell side liquidity. So I had my overall daily bias. That's the first thing I do whenever I hop on the chart. I then proceeded to zoom out into a 1H time frame. Now on the 1H time frame, I could see that price was in the process of retracing. It was currently retracing the previous impulsive move that had happened on the chart, and we were kind of on the way back up before a second leg of structure. At least I thought at the time. So on the 1H time frame, what I saw is price was in the process of retracing. It was currently pulling back against the overall momentum of the market, meaning that 9 times out of 10, when you're in a downtrending market, price pulls back to make what? Make a lower high. And usually, and again, especially for US30, price tends to pull back to create the lower high in line with the previous lower high also, or the lower low rather. So previous structure is always a nice key level. Now you can see right here in this clear example, price pulled back and we came into this little level here on the left. Now if you look even further left, as a little additional confluence, a previous area where price kind of rejected from and bounced off of. Now zooming out a little bit further to like a 4H, you can see also it was a nice area of previous structure. Overall, it made sense to have my key level here. I don't want to get too technical with SMC, but you could consider this a breaker block, a 4H breaker block. And zooming down to the 1H, you could also consider this a 1 hour order block level. So you could say that I was maybe potentially looking at that, but I'm not really too focused on these other concepts. To me, it's simply just relative structure. Price pulled back, we created a London session level, took out that liquidity and proceeded to hold around here pre-New York. So I knew that more than likely I was looking for a short. We were currently staggering at a key level, we were exhausting, and I knew that price wanted to move. I then proceeded to scale into a 15-minute time frame, and I saw once again that price was kind of staggering, it was holding. Now what I noticed is that we were leaving signs of depletion. We were leaving signs that the candlesticks were weakening, the bullish pressure was exiting the market, maybe sellers had perhaps stepped in, and we were failing to break the previous structural high. So this was the previous high that was left by price, and we were coming up into that level and we were just failing to break. We weren't able to get enough momentum, get enough volume to take out the structural high. So what I wanted to see as an additional confluence before I went ahead and took the short is I wanted to see lower time frame structure get broken. I want to see a change of character, break of structure, whatever you want to refer to it as. I want to see that bearish order flow step into the market. So my first little level I was looking at would have been here, because this would have been the most relative recent structure. I'm not really too interested in these wicks because it's very easy to get faked out if you're looking at too relative structure, but to me this seemed like a nice significant low relative to this time frame. So I then scaled down to the 5-minute and I went live with the Learn and Earn. Once again, if you were there, you would have seen this all live play out, and I waited for this level to be broken. So we played price forward, and you know that we created another low right here. We broke below the level, created a low, and we came back up. So at this point on a 15-minute time frame, it still didn't look great, and I was thinking that price could potentially come up and swipe this buy side liquidity right here. So I still wasn't going to take the trade until I saw lows get broken. And then in the next 30 minutes, what happened is price came up, we created a lower high before breaking structure and creating a lower lower back to the downside. Now this candle right here was my confirmation. So zooming into a 5-minute, I actually managed to catch it on the next little like wick, the next little retracement, but this was my entry. Now stop loss was very safely up here above structure. Now I know a lot of you guys in the comments are probably thinking, Like Daniel, why? Oh, zoomed out too far. Like Daniel, why did your stop have to be the whole way up there? Well, it's pretty simple. For my strategy, I mainly trade one to twos for psychology reasons. I find that it's just the easiest to maintain. It's the most sustainable, and you don't really tend to get wicked out on one to twos. I could have very easily had my stop loss either here, just above these structural highs, or had it even tighter just above the previous relative high and caught a much higher risk reward ratio. But simply for peace of mind and just overall in my trading strategy, I don't need to be doing that. I don't need to even risk maybe getting wicked out. So I just had a much safer, wider stop loss where price would never come up here unless we completely reversed, and I caught my 1 to 2.5. Now the reason that I took profit exactly down here before price reversed is on a 5 minute time frame. If you scale the whole way in, you can see that we have this bearish order block that's previously left, or an area where price could potentially bounce off of. And we had a huge impulsive, a huge sell-off to the downside with no retracement candles. And the second we came into this level, we began to retrace and consolidate. So I just got out of the market. Very, very simple trade, very clean. And this is what we tend to look for in terms of trading US30 continuation moves. We like these breakout impulsives, quick in and out movements. We don't take the piss. Nice safe stop loss. But that's all there is to it. And this right here is how you make 6 figures a year. Don't fuck with them. Don't fuck with them.